Welcome to Energy Unplugged, the go-to podcast addressing the global energy transition. I'm Hugo Batten, Managing Director of Aurora in APAC. Delighted to be joined by today's guest, Rohan Ma. Rohan's been at the forefront of battery storage optimization, in particular, developing and scaling Tesla's Autobidder, Tesla's battery bidding software. He's recently left that role and he's had a variety of other roles in energy, at PG&E and SolarCity, for example. Rohan, welcome to Energy Unplugged. Absolutely delighted you can join us.
Thank you for having me. I'm a big fan of the pod.
We're also joined today by Julia Hughes, Aurora's head of US East, who's going to chat with us today. Welcome, Julia.
Thanks, Hugo. Pleasure to be here.
Rohan, let's jump right in at Tesla then. So you did, I think, about 8 years, which I imagine is like dog years in terms of intensity. Could you talk a little bit about the culture in the early days and just how it's evolved over time as the organization has scaled?
Yeah, it's definitely a very unique culture in my experience. I think the best way to summarize it is it's an all-in culture. And so I actually remember the first time I went into the office, the corporate headquarters at the time in Palo Alto, and there was kind of hardware and boards and prototypes everywhere on the desks, and the office was packed, and it really had this electric energy to it. And actually, the first meeting that I had at Tesla was with Elon around Christmas of 2016, so almost exactly 8 years ago now. And I won't talk about what I was working on, but had worked through the holidays to sort of form some pitches and proposals, and passed it to my boss and assumed that my work was done and wait to hear kind of how it goes. But the next day, got this calendar invite to join a meeting that afternoon, and the meeting invite said Elon wants all the people who did the actual work to be there. So I assumed, well, that's cool. I'll sit in the back and maybe get a sidebar question from somebody. But ended up, being put on the spot and actually presenting the core concepts right out the gate, taking some of the constructive, feedback or criticism that we got on the proposal. And the culture was really kind of directly imprinted on me, from that moment on. It was, very egalitarian, definitely intense, an engineering kind of first culture and mindset, very fast decision making. But yeah, just all in, all into the mission and what we were doing. And it was a highly empowering culture and exhilarating at that moment in time, at least for me. Huge value on problem solving, and that's something that is kind of valued throughout the company. I remember in 2018 during the Model 3 ramp, I was working on energy and charging, not on the vehicle side so much, but it became an all hands on deck situation. A bunch of us picked up and drove to the Gigafactory in Nevada, really with not much direction other than get in there and walk the facility and solve problems. Whatever you can do to drive the yield up. We had software engineers, mechanical engineers, electrical, people from all different disciplines. And, in that week, there was hundreds of ideas injected and implemented, and the bottleneck moved from Giga to Fremont. That's the type of experience that was pretty kind of standard at Tesla. And, over time, we became bigger, not just in terms of people, but also just the product variants, the geographies, the markets, and had to deal with more regulations and standards proliferating, the need to sustain products, not just launch new ones. And, that invariably increased the need for cross-departmental planning and coordination, some of the kind of big company stuff that's unavoidable. And it's a little bit more execution focused now, maybe than those early days, but I don't think the culture has fundamentally changed. And I was always amazed at just how it felt so small given its size and how nimble it was. And really the core of that has not changed in my view.
Yeah, that's incredible. Just a bunch of software engineers wandering the factory floor trying to find improvement ideas. To pivot then, so Tesla's approach and prioritization of grid scale storage, again, it feels like it's evolved a bit over time. Can you talk about that, particularly as it's had all this success on the vehicle front, And like, what do you see happening moving forward?
Yeah, well, I mean, when I first came, it was really a consumer products company, exclusively kind of at that time, and that it was, vehicles and Powerwall and solar, rooftop solar. There was a power pack product, which was the kind of commercial and industrial product, but it was more focused on behind the meter applications and, smaller projects. And the prevailing wisdom was kind of that the the Tesla brand and the brand loyalty and all these things that made the consumer products, so differentiated at the time, that really didn't matter when it came to grid scale storage, that it was a commodity industry and be a race to the bottom on cost. But there was a project in 2016, I think, in Southern California, called Aliso Canyon. That was, I think, the first real project at 20 megawatts. It was an emergency procurement due to gas shortage issue in Southern California. But it was more of a kind of rate-based, utility owned and operated. So a little bit more of a kind of EPC kind of construction and service project for Tesla. But that was the first kind of grid scale one. And then Hornsdale, which I'm sure we'll talk more about, was really the moment that things changed when we went from 20 megawatts to a 100 megawatt battery in South Australia. And I remember sending that first node a couple weeks into operations that, the asset had made over $1 million overnight. And it was an aha moment for all the leadership, I think, of just realizing these products can really earn money and be a good investment and not just kind of be emergency grid backup capacity projects. So Megapack is really when the company leaned in and optimized for grid scale projects, and then Megapack 2 with a dedicated factory here in California and dedicated cell for stationary storage, moving to LFP. So that was a big moment for energy, being kind of delinked from the vehicle cell supply, which had been, limited at times during kind of the COVID pandemic. But yeah, there were some dicey moments, on the grid scale storage program over the years, for sure, in that 2019, 2021 period. But all those difficult years really fortified Megapack into where it is today. And, it's really a bright spot for Tesla, particularly over the last year. And I think, major growth going ahead. I think the focus, is really just on scaling, just kind of really intense scaling. There's definitely product market fit with the Megapack 2 at this point, continuing to focus how to get installation efficiency and cost down. At some point, they'll, look at longer duration variants, but I still think we're probably years off from that. So I think it is really a scaling game at this point for Tesla on the grid scale storage side.
Yeah. It's so interesting that Hornsdale was a pivotal moment. Because it's such a crazy story, right? The lights went out in South Australia. Mike Cannon-Brookes, another Aussie tech billionaire, tweeted, and Elon tweeted back. And, I think you guys had that asset in within 100 days. And I'm just looking at some of Aurora's latest kind of battery dashboard stats. It's over, I think, 6 or 7 years. It's basically made twice its CapEx in that period. And a lot of it was frequency response, but a big chunk of it has been wholesale arbitrage as well. So an amazing story. And I didn't realize quite how pivotal it was in the Tesla grid scale story either. I mean, it's certainly a watershed moment in Australian energy, I think.
Yeah, and that was really the origin of Autobidder was Hornsdale and that project, and those rolling blackouts, creating these emergency conditions, and Elon making that kind of very public statement on Twitter to build the batteries in 100 days or it'd be free. And I was part of a group that hopped on a plane and from HQ and flew over last minute to join our Australian team and just try to figure out how to win the RFP contract from the South Australia government to build the battery. And that was an intense 2 weeks of just looking for a partner and a viable site that had a path to bring 100 megawatts on by the end of the year. And as part of that kind of deal process, we built these dispatch models to understand the revenue potential and inform deal economics, against production costs, PCM kind of price curves, like what Aurora produces. And we built these dispatch models to really co-optimize the product across all the, ancillary services and energy. And it became pretty clear over the course of those 2 weeks that the asset was really being undervalued by the market. The production cost models weren't really capturing the volatility that was consistent with observed trends, and a lot of the models weren't even producing ancillary service price forecasts at that time. I remember a big sophisticated utility who I won't name, but what they were willing to value it at $4 million a year, and there was years where we made 40 million at Hornsdale, just to give you a sense of the kind of the magnitude of the mispricing that we saw. And so that's really what catalyzed Autobidder, because we realized that nobody else was really going to do this right or operate it the right way and show the full potential of the asset at that time. The industry just kind of wasn't there, and there was value to sort of having a purpose-built solution for energy storage in electricity markets. And so we built it for ourselves first for that Hornsdale project.
Super interesting. And then what have been some of the challenges then of scaling Autobidder, but also rolling it out internationally? Because in some ways, like, Australia's a relatively simple market. You've got a wholesale, you've got a few ancillary markets, 5-minute real-time dispatch. I imagine for the Autobidder team, that is, like, on the scale of market complexity, potentially one of the easier markets to get a handle on. That might not be true. But what has been some of the difficulties of scaling it in a given market, but also rolling it out across a ton of different markets internationally?
Yeah, I mean, I think first, on Australia being a simple market, yes, there are aspects of it that are definitely simple and sort of conducive to an algorithmic solution like Autobidder. I think in some of those early days, the sheer number of products that were kind of being co-optimized, I think it was 9 or maybe 10, because the load and gen was 2 separate resources. It did create a lot of challenges around kind of traceability and interpretability and kind of trust of the algorithmic decisions, because there were so many different decision variables that at times it could be hard to kind of just look at it with an eyeball and determine that it was optimal. So even with a relatively simple kind of market construct in Australia, there was still like complexity that was, a byproduct of these algorithmic solutions. As we looked to scale it out, I think there are definitely similarities in, deploying algorithmic solutions in electricity markets around the world. I mean, just from first principles, you're dealing with an scarce, an energy limited resource that you have to decide how to allocate, both across products and understand how now, relates to the future. So there's some time series component to it. But there's definitely a lot of nuances in the markets. And I made the mistake of going to our second market, was the UK, which probably couldn't be any more different. I kind of think of Europe and then the US and Australia as 2 separate categories. And in Europe, you had, things like pay as bid markets. It's instead of uniform price clearing auctions, you had, more fragmentation in terms of the temporal clearing of when different products were being cleared. There's a day ahead and there's real time, but it's even more fragmented in the UK, or at least it was when we first entered. There was more of a human component to clearing in the UK. And that makes it hard to kind of algorithmically predict, what to do if there's uncertainty in the way things are cleared. So that was very different, and that was a lot of pain. And I think when I first started, I might have thought there was going to be one global solution to all the markets. We very quickly learned that was not going to be the case with the UK. And we evolved to thinking more about best practices and common practices, and applying those to different markets, but not holding on to the need for a monolithic code base that that runs one thing and solves all markets, that was impractical. And but applying kind of the best practices was really the sweet spot that we saw. And then looking to unify over time where it makes sense, but unifying once you have experience operating in the market and you kind of know where there might be synergies and efficiency gains of unifying, as opposed to it's just so idiosyncratic to that market. You want to kind of keep it as a standalone solution.
Super interesting. And maybe one more question then on Autobidder before we just go to kind of battery economics more broadly. I mean, it feels like, and Aurora's at the bleeding edge of this too, that battery economics is just getting more complicated and markets are getting more complicated. You look at California where your ramp is getting steeper and steeper, your whole energy system is becoming more weather dependent, whether that's hydro or solar and wind. What do you see as the big challenges for softwares like Autobidder moving forward? I've had a number of things suggested to me, right? That like to some degree there's some safety in pricing up to gas, at least in the NEM. And that's not a bad bidding strategy. As you have less and less gas on the system over time, that becomes less and less plausible, right? You kind of gigawatts of batteries pricing up to the last 10 megawatts of gas, that kind of concept. So where is it getting harder, just on the technical side, do you think, for softwares like Autobidder?
Yeah, I mean, I think one is simply that customers are moving from their first, second batteries to moving closer to 10 batteries or portfolios of batteries. And so managing portfolios as opposed to single resources is more complex. And there's, almost cannibalization or competition between your own portfolio, and sort of being able to handle that because storage is increasingly on the margin. You're alluding to that, and there's only kind of so much liquidity in the volatility. There's so much volume behind that volatility. And then on the other hand, you have more and more sort of batteries that others are managing, and these are all highly flexible and kind of fast and nimble resources. I think that kind of game between the batteries and even within a portfolio is something that we thought a lot about, or just because we had gotten to a scale where we were sort of managing fleets that were big enough to move markets, and I think more and more folks are going to need to grapple with that, and it's challenging.
Yeah, really interesting. And then on the other side too, you have those large players with so many portfolios, and then you also probably have many, many smaller players right now thinking about their very first battery, right? And learning about each individual market. I want to follow up on that. Rohan, you talked about the intricacies of different markets. Do you think it's possible for one organization, one software to be good across all of the different markets? Or do you think that they really are evolving to be different enough that organizations are needing to specialize and just get good at one particular market?
Yes, I think it's possible. I think you need to have the right kind of staffing and organizational structure to be able to do it. I mean, I think that there are these kind of common challenges and needs on the software and infrastructure, level to do this well. One thing that's maybe talked about less because there's so much focus on kind of the real-time solution is just the need to handle simulation, and simulation is, I would talk about it with my team, is like simulation needs to be a first-class citizen to production, because how else can you drive kind of systematic and relentless continuous improvement? You always need to be simulating, and you need to be simulating a lot of different scenarios, parameters, forecasting methods, all these things. And so that's kind of software, distributed compute, the ability to scale simulations is something that can sort of be amortized or be useful across all markets. But you absolutely need to pair it with highly specific in-market expertise by market, and that staffing is always tricky of finding the right people that have that deep market expertise that can sit and pair with the software developers and the machine learning engineers or the optimization engineers and kind of translate expertise into kind of systematic insight or strategies. It's not easy to sort of hire and retain the right team. It really is about the people, but I do think it's possible. There's no inherent reason why it's not possible.
Yeah, interestingly enough, I think that high complexity across different geographies and also across simulating, like you're saying, was a big reason for Aurora's growth as well, right? A lot of space for us data nerds. Really, really interesting. How do you think about, Ron, because we talked about California and Australia, those were early battery markets, but there are many markets now that are starting to open up as battery markets that don't see the same kind of volatility, right? We're having more conversations now about fully contracted batteries that might be tolled or that might have capacity offtake. Is there still a model for Autobidder in those markets? Does the role change?
Yeah, yeah, there definitely is. I mean, I think that even in the case of Hornsdale in Australia, I mean, there was an offtake contract, and meaning there was a capacity component to it, and that capacity contract brought certain operational requirements in order to be compliant with it, that in places like California or must offer obligations, and all capacity markets UK have some sort of requirements around the offtake that need to be operationalized, and so Autobidder would handle that. I think that the question is always, to me, does the asset, somebody needs to operate the asset. And so does the asset have an incentive to be optimized against the real-time price signals or not? In most cases, it still does. And so somebody needs a solution to do that. It could be Autobidder or some other solution. But unless you're dealing with an offtake that, for whatever reason, there's maybe some type of scheduled kind of offtake or incentive to just kind of do a very deterministic scheduled thing, there's definitely a role for an optimized solution to play.
I'm sure you're also providing a sense of comfort in some ways then to an owner who has a capacity obligation. I see many of our clients, for example, in the Eastern US markets, that there's still insecurity. How can I operate a battery in line with the contractual obligations that I have? So I suspect in many ways you're their expert on the ground there to make sure they're complying.
Yeah, and that's what's nice about a solution like Autobidder, is that these rules can be expressed in math and almost guaranteed as constraints. So that was always part of the kind of value proposition of Autobidder, was not just increasing revenues, but within the confines of being totally compliant with all your market rules, but also your contractual obligations, and there have been contractual obligations like that from the first project.
Right. And in some of our markets, so I cover, for example, Massachusetts, you made me think of these target dispatch windows that a lot of the markets are playing with an obligation during a select number of windows to try to maybe almost optimize themselves when they would like a battery to dispatch to be eligible for certain bonuses. So I think that's one we're keeping a really close eye on to see the extent to which that starts to almost obscure market signals, right? And
yeah, it actually, so that program is, I'm not that familiar with it. It's essentially dictating when the grid scale storage should be discharged on a schedule.
Exactly. There are a number of windows that are eligible to receive these credits called CPECs, because those are considered high emissions windows, right? And so batteries, of course, then are dispatching the energy that they're charging during the day on solar power. And so it really is a system intended to ensure that there's cleaner energy on the grid at all times. But it does start to change some of that optimization behavior. And from our perspective, right, we start to look at how that then also changes the price signals in the market overall, because batteries are not behaving in an arbitrage fashion always.
Yeah, that seems like a missed opportunity to me. I mean, I think of also NEM 3 in California, or the net energy metering kind of successor that has moved to more dynamic hourly pricing on exports, and residential storage responding to that. And It's become much more, high resolution relative to what was in the past. But, you have this real-time market that's sending, real-time prices based on what is really going on. And it doesn't always fit in exactly the administratively determined windows in terms of when you should discharge or charge. And it just does seem like a missed opportunity. But I guess there's benefits to the simplicity of a program like that.
Yeah, I was gonna say, I'm gonna put you on this spot. Does that mean potentially markets are starting to over-engineer and overcomplicate the way that power should be dispatching, perhaps, right?
Yeah, perhaps. And then particularly when they're in that particular case, when it's a consumer-facing program, it's very hard for customers to understand. But yeah, I don't know. I'm a big fan of markets and competitive markets and price signals, and so I tend to lean that way as a solution, as opposed to administrator programs.
Sure. And to continue to put you on the spot about different markets, you've seen a lot of them. We've talked about the intricacies of several. So if you were starting today, developing perhaps your own set of battery projects, you had $1 billion or $2 billion US dollars to invest in building new batteries, would you still be looking in those same markets that you started in several years ago, or do you think you would shift your focus and build somewhere else today?
Yeah, it's interesting. It's a hard question, and I think honestly, if I had total conviction on that answer, I'd probably be doing it right now and staying quiet.
Yeah, fair.
But I was definitely, looking at SPP a lot more, given the renewable fundamentals there. Increasing most rapidly, I think, in that market. It's a very large, deep market. But also looking at kind of different use cases for batteries and operating them differently, whether it's like offtakes for 24/7 firm solutions, being kind of driven by more corporate demand and interests, or even co-located with loads. Given the demand growth situation here, I think there's going to be opportunities in all markets kind of emerging around that. ERCOT is an interesting one. I think we'll see how many projects continue to come through the queue, but there could be good deals coming up after a calm year where, I think some folks are spooked a bit and grappling with kind of the reality of saturation, which we certainly expected, but it's another thing to, forecast it's going to happen and then start to see the kind of lower revenues come in. And there's a lot of, so I think there is some fear and hesitation right now, and there may be opportunities to acquire existing projects or queue positions because of that fear. There's huge demand growth coming in ERCOT, and so unclear how much of a handle they really have on that. So I wouldn't stop looking at ERCOT, but there's definitely been a huge increase, and that's a little bit more of a fear play than an optimistic play, I guess.
One final question, Rohan, that I want to play back to the Tesla line of conversation that we were having earlier is that you really were and are in a unique position of developing both hardware and software. And I'd love to hear a little bit about how one enabled the other and whether you think that's a unique competitive advantage.
Yeah, I wouldn't say we needed one to do the other, but there were definitely real benefits on both sides. And, from the software and Autobidder side, hardware, building the hardware and the product itself, it injected us into conversations early and allowed us to be partners at the right time and kind of thinking about applications before a software solution was really determined. So in the early days, that was very important. We sat next to the cell and the hardware teams, in Deer Creek and Palo Alto, and that gave us just really fast feedback loops around kind of what mattered and didn't from a degradation or performance standpoint. We could deploy software directly to the device or run it in the cloud and kind of make those decisions from first principles as opposed to, some arbitrary limitation on our reach. And, there was times where we even knew how to push the hardware harder at times for extremely valuable periods, kind of without jeopardizing warranties. So a lot of things like that. We had seamless full stack integration. So that was standardized and saved us a lot of time. So as soon as that project was commissioned, the data was flowing very easily to us. It was all plug and play. And that probably allowed us to be smaller and more efficient and quicker than some of our competitors. And on the hardware side, there were also benefits because of us extending so deep into the application stack on the software side. We could really bring our learnings back to the hardware and product, teams to inform next generation specs and strategy. We were, inform it from direct experience operating, bring that and engage in market design conversations to open up markets. So I remember, for example, in ERCOT, there was some absurd rule in 2019 around auxiliary loads that essentially disqualified Megapack from being able to operate in that market due to its design. So no customers were willing to take that risk of going with Megapack in ERCOT because of that. And by us doing our own project and doing the first 2-hour battery in ERCOT with Autobidder, it allowed us to engage ERCOT directly and actually get those rules changed and then open up the market for the broader product. So all in all, I do think it's been super valuable. It's a lot of little things that compound over time, not necessarily one thing that trumps everything, but it's definitely been an important part of the success story for Megapack.
Wow, yeah, I suspect no better way to get instant and constant feedback than being your own biggest and first client.
Exactly.
Excellent. While we're on that topic of market design and market uncertainty, I want to round us out with one market-based question. We'd probably be remiss not to talk about the election, given where we are at the end of 2024 right now. And I think the question on the minds of many people heading into the next year is what's going to happen under the Trump administration regarding the Inflation Reduction Act. There's a lot of conversations, particularly around tax credits, which have really enabled and opened up the energy transition broadly, and of course, batteries specifically in the United States. Do you think some of those fears are overblown in terms of rolling back some of those tax credits, IRA provisions, or do you think that keeping an eye on those and some of that concern is correctly placed?
Yeah, I mean, I'm sure an energy analyst has looked foolish trying to predict President Trump's energy or policy decisions over the years. So I approach this question with humility, but I would say that energy security and supply chain security seems to be a fully bipartisan issue at its core. And I do think tracking the money and jobs by geography and congressional district is fairly predictive and it's sort of a powerful framework to look at what might happen here, and particularly with Congress having such razor thin margins. It may be a little bit overblown, but there's also been a lot of public statements made. I also think there's going to be a lot of competing policy priorities. So I don't know how high it will kind of fall on the relative sort of order of priorities. I think the truth is the majority of these projects are going to go forward on the economics alone. I mean, we do have huge load growth prospects on the horizon in the US, whether it's data center demand, re-onshoring of manufacturing, or the electrification generally. So how much political capital is there right now in slowing down more power supply coming online? I'm not sure I see it. I think, yes, more gas will get built, but we just need to build more power supply generally in this country. I think there's unanimous agreement there. So I think it might be a little bit overblown, but we'll see.
Exactly like you say, Rowan, something's going to have to build if the demand is there, right? And a lot of times the economics will lead the way, and you are one of the first to see precisely how good the battery economics can be. So certainly makes sense.
Awesome. Ron, we try and finish with a couple of rapid fire questions, or at least I do on the podcasts I run. So 2 quick ones for you. What's one hypothesis or view that you have on energy markets or the transition generally that you think is at odds with the kind of general consensus out there?
Yeah, I mean, I'm not sure if this is necessarily out of consensus, but being at Tesla for so long, I think I became very conditioned to, and helped write the Master Plan 3, which was, a vision of a completely sustainable kind of, zero emissions electric grid and fully electrified economy. Sort of been conditioned to that end state of 24/7 or bust. And we almost think of it as this existential kind of binary, success or failure. But the benefits of climate mitigation are linear or diminishing at some point, and the costs of climate mitigation are kind of exponential, as a lot of us know, as you move towards, from 90% to 100%. And so, stepping back, I think, is it just seems that the most likely outcome, the base case, may be to get to kind of 80% renewables, this century or sooner, and perhaps that is good enough. Perhaps that delivers a lot of the climate benefits that we need, and it will be a major human achievement, I guess is what I'm saying, even if we get that, and it seems highly likely and perhaps even inevitable. So I just think a lot of people are kind of down these days on the transition that have been in it for a long time. And I guess what I'm saying is we don't need to despair. We shouldn't let that ambitious goal of shooting for kind of full 24/7 and this sort of fully clean grid. We shouldn't let that ambition discourage us and block us from seeing like all the incredible progress that we're making. When I think about the beginning of my career, where we were on these topics to where we are now, I mean, it is incredible. And so I remain very optimistic about the future of energy for humanity and just the prospect of really low marginal cost energy supply and what that's going to do for society. Maybe we don't need to get all the way to 100%. I feel weird saying that because I think it is the right goal, but there's a lot of benefits to getting most of the way.
Yeah, totally. And it's certainly a duality. We deal with it at Aurora, right, where incredible progress has been made. The prospects in a number of countries look good. But there is this realization that parts of the transition are going to be probably more expensive than we ever thought. Transmission's hard to build. How do we need to augment our gas networks to provide backup, dispatchable supply? All of those kind of questions, I think, are coming to the fore. It's not just about renewable and battery LCOEs. Awesome. And then reading recommendations. Who do you read or listen to in the energy space that you think is always good, thought-provoking, and relevant to your work in the private sector?
I wish there was more, to be honest. I'm definitely big on the podcasts these days, this podcast, but the Energy Impact Partners podcast, Latitude, I think it's called, the Powerhouse podcast, and Energy Gang are three that I listen to, and generally find them to be well curated and have interesting guests. The reading wise, I'm going to expose myself as a total nerd here, but I would recommend anybody who's interested in really learning about electricity markets to read the ISO RTO kind of grid operator quarterly reports that AMO and CAISO or all of them put out. That's really where I learned, and I read them obsessively earlier in my career. There's a lot of information. They're well written. They provide kind of narrative overviews of what happened in the market and why. And so, if you're really looking for some to dive into electricity markets, I would recommend checking those out.
No, 100% agree. Particularly the ones that CAISO and AEMO put out. I think were two you named. I think are excellent documents. Thanks so much for your time today, Rohan. We've covered a huge amount there. We're super appreciative. Thanks again for coming on the pod.
Thank you so much for having me. Have a great day.
And Julia, thanks for joining us as well.
Thanks so much, both.
That was Rohan Ma, who founded and scaled Autobidder at Tesla, talking to Hugo Batten, Aurora's Managing Director for APAC, and Julia Hoos, Aurora's Head of US East. Thanks for listening to Energy Unplugged. Do keep an eye on our podcast feed for more in-depth conversations with senior members of the energy industry. The best way to do this is to follow or subscribe to the podcast via whatever platform you use.